Riley, on that last point, like before we even start, I need a
We're
vacation
live.
so
We're live
bad.
already.
So yeah, it's fine.
Okay.
So I'm really looking forward to it.
Yeah, me and Tevis are gonna go see Elon Musk's Starship in April. We're gonna make a 6-hour road trip all throughout Texas, and we're gonna go see that thing go up.
Yeah, it's gonna be my
Hopefully
first
not blow
time in
up.
Texas, and Riley promised me barbecue and shooting guns. So it's gonna be a traditional American experience for me. I'm looking forward to that.
I've been to
Gotta
Texas
get the full experience.
Yeah, exactly.
Yeah, you gotta get that. I've been to Texas a good 10 or 15 times, and it is definitely an experience. Texas is
It's very ugly.
Bro, I lived in Denton, Texas for 3 weeks.
Really?
Yeah, Denton is it's an interesting place. It's like West Bubble F, Texas.
Well, how were the people? And
They were cool. I mean, people were friendly. It's Southern, people are cool. The what's that place called? Whataburger. Oh my gosh. The honey chicken biscuit. That's what you got to get.
There you go.
The honey
dude.
chicken
Okay,
biscuit.
So you're an honorary Texan now.
Dude, I'm just excited to see Austin. Like, I've heard so many good things and the burgeoning tech scene there, and it just seems like a cool vibe, like South by Southwest and everything. And so I'm just really looking
I
forward.
drive by the Texas Gigafactory like all the time when I
fun to
travel.
see.
Dude, it's crazy. It's like you're on a highway, you're going like 70 miles an hour, and you still haven't passed the building, and you're just looking over to your left. Like,
Yeah,
there it is. Whoa, this thing's huge.
Wow.
It's crazy.
yeah. I feel like there's gonna be some fun like videos that are gonna be coming out of Texas for people for the pod. as well
You
as
guys
just
should try to
individual-
come to New Jersey if you have any time.
Dude,
I'll
just
show
come to
you-
Texas. Like, there's room in the car. We can do a road trip, see SpaceX. You can vlog it the whole time, like you do. Do it for the
It's a
content.
compelling
Tanner-
offer.
Tanner
You do
jumped
that
in the
vlogging
pool.
thing.
That would be fun.
Yeah.
To spend time with you guys there. Wait, how long would you go for? Like a week with Riley?
Yeah, so I'm planning to do about a week. Well, so here's the problem. We don't know necessarily when the launch is. It's still blocked on FAA, but he said third week of April. I'm sure in his mind he wants to do 420. Like, that's a goal. So I was looking at like 17th, 18th, all the way through 25th. So just looking at a calendar right now, that's about 1 week on the dot.
The whole reason I want to go so badly is this is the first launch of the Starship, which is the biggest rocket ship ever. And also there's a high probability it's going to crash and blow up, which is going to be freaking cool.
Wow.
Right. Or it lands, which is even cooler. So
Yeah. Making history.
Yeah. And it's a full like road trip down Texas. Like, you can do like Dallas all the way down to Austin.
You got to go to the Mothership, that comedy club in Austin. Joe Rogan.
I'm down.
Dude. There's no way we're going to get in. That thing is.
That's true. Yeah.
I want to.
If
so
anybody
bad.
has good Texas suggestions, drop it in the chat and I'll save it and look it up after.
Well, apparently on a podcast, we all talk too much. So that's
Vadim, we're going to be talking about you pretty shortly. So
Vadim.
Vadim.
Why are we talking about Vadim?
Is that Russian? That sounds like a Russian name.
because he did that Michael Burry like chart where he like compared Sofi to other banks.
That's a good chart.
Yeah.
Okay, before we start, Tevis, did you enjoy your Thursday night?
My 3-hour stream that was okay. So here was the plan. I was like, okay, in addition to the highlights video, I work way too much and I can only manage one, maybe if I'm lucky, 2 solo videos per week. And I said, okay, this week I asked Steven, I was like, do you want to do pre-recorded or do you want to do a live stream? And he's like, whatever, it's up to you. And I said, okay, I've never, really done live streams before. Let's try it and let's see if people actually join. My goal was to do a 30-minute live stream, very targeted on specific pieces of news and his article, and then cut that into like a highlights from that live stream. That can also serve as my second piece of content. I have 2 pieces of content. I'm laughing, right? 3 fucking hours later, these guys are talking about politics. They're talking about all kinds of crazy stuff.
Yeah.
Let's not forget, you invited us on. You were like, guys,
mean,
come on. We're like, all right.
I was surprised, man. There was more people that were actually staying for longer. And so I wasn't going to, kill the party. But anyways, it finished like 12:30 at night. It was 3 hours. Steven DMs me afterwards. He's like, let's go for 4 hours next time. And I was just like, all right, dude, like I'm down. Just let me prep ahead of time. He's like, oh, well, if you're prepping, let's do 6 hours. I was like, what? Like, no. So we might just do a SoFi marathon. But yeah, it was fun.
I love Steven's takes. Really smart guy. I thought his take on Tesla was like near abysmal. Like, I mean, you can't compare every single stock to one metric, or else there would be a one metric suits all. And just looking at I forget what it was, some metric to the average free cash flow or something like this for a company on the S&P 500, I thought was a really weird
price to free cash flow ratio versus the average of all the top companies, which like they're all in different industries. So it's it's the same argument that you would make if like that people were making where it's like, oh, SoFi doesn't have, these good valuation metrics compared to JP Morgan. Well, it's like, well, they're at different parts of their growth life cycle. So obviously you can't compare them apples to apples. So that's the same way that I interpreted it, where he was comparing, Tesla to a lot of these, like to like Verizon.
Well, I thought you defended it perfectly, where you said you stated that if you just sort it by lowest to highest, then that means that I think JP Morgan was the cheapest one on the list. And then he said, well, very specifically that he didn't like that stock, right? And so if you're going to actually look at their product and look at their management and look further into the company, then you have to do the same thing for Tesla on the opposite end. You can't just look at the metric and go, okay, this is why it doesn't suit, but JP Morgan's a different story. Right. So, but anyway, SoFi.
Right.
Let's get into the first piece of news. I think this was the biggest thing. $2 million of FDIC insurance has been guaranteed. So
before
ahead,
we talk about this, let's play the second clip of Noto, because that was the first time he ever introduced it, and he actually goes into a little bit of color. This is the video that has Noto's face on it as the thumbnail.
In addition to that, there are some other initiatives that will roll out in the coming weeks that, will be interesting to see how the market reacts to. As one example, we plan to roll out a service where we provide up to $2 million of a member's deposits being insured with FDIC insurance. When we first launched SoFi Money, we actually provided an opportunity for our depositors to have more than $1 million of FDIC insurance. Back at that time in 2019, it wasn't that attractive. We asked our members if they thought it was helpful, and we didn't see a positive response. And it was a little bit costly, and we decided to end it. But given the environment we're in now, even though we have 90+% of our deposits insured, we want to roll out this additional service where that up to $2 million of their deposits will be insured with FDIC insurance. So we'll see how that impacts the rest of the quarter as well, but feel comfortable with our prior guidance for the quarter and the year.
All right.
Interesting that he mentioned that it was costly before, because I know, Tannor, that's one of your main points. It's like, how much is this costing us?
Mm-hmm.
Right.
And we're doing in 2019. I'm sorry to interrupt. That I know there's a huge discussion on Twitter right now saying that like SoFi just did this because of the SVB collapse, and they worked on this technology within a week, and they threw it all together and made it available to everybody. Which that's not true. Like they've had this before back in 2019.
Well, yeah, there was a list of all the other banks that were collaborating in this. Was there not? I think that list was circulating somewhere.
But it's part of Apex's network, I think. Correct me if I'm wrong. But Apex is our clearinghouse. They make sure all of our investing stock trades go through. But they also have a program where we can up our FDIC insurance, I think.
Yeah. So what's it called? Whenever I originally saw it, so we had $1 million. This was before a bank, right? So we were paying a decent portion. What we're pretty much doing is renting a charter, which is having a partnership with a bank where you give them their deposits, and in order for them to do that, they are going to give you a cut back. But if you're actually spreading those deposits out across 4 separate banks to get that 1 million, then you're giving a spread to each one of them, and it's kind of increasing your admin costs. You can say that we're doing that even more now. We're spreading our admin costs. What could have been 1 bank that we have to pay for is now 8 different banks. But that being said, also, we are in a very different place now as well. We're making a ton more per dollar on the actual deposits that we're bringing in. And there are a couple things that we have to understand. Like 250,000 of these dollars is very specifically our deposits. Okay. We can use this to lend out, to our actual loans and get 190 basis points as of last quarter and the spread difference for our loans. We're still going to be making a lot of money on the deposits that are actually going to those other banks. But like I said, there's going to be a difference there. There's going to be a difference in the actual administration and how we actually use those deposits to fund loans. It's going to be very different. But we could see a lot of new net interest income instead. And in that case, I mean, it still is great. And I thought this was an amazing move from SoFi, but I'd love to hear you guys' thoughts.
Yeah, just approaching it from a sort of logic perspective, I would imagine that they would have never done this if it weren't for the SVB situation, because the increasing the APY on savings and this sort of go hand in hand, in my mind, at least, to serve as a net to capture all of those deposits that are leaving these banks like Signature, SVB, and such. And obviously, Anthony Noto, had this fireside chat this week, and there he talked a lot about the behind the scenes planning on a lot of these decisions that went in on student loans, what the planning and logic was there on a lot of these other decisions with regards to their lending and their product rollout in general. So they're presumably extrapolating that logic. There obviously was a cost benefit analysis to say, even if we're losing incrementally, let's just say in the worst case scenario, even if we're losing incrementally on all of these deposits that we're now insuring up to 2 million FDIC, just the fact that we're capturing more users makes up for that when you consider the LTV, the lifetime value of those users, right? And so on aggregate, it turns out to be a good move, capitalizing on the macro weakness and the sentiment from a macro perspective. So the 4% and the FDIC insurance, both of those moves seemed like very targeted moves as a result of SVB, which otherwise would not have happened, or at least definitely not as fast.
Yeah, exactly. I think it was just great timing. And I messaged you this, I think, Tevis, during your live stream, but I think, Noto is a wartime CEO.
Right.
Like, he is capitalizing on everywhere where a lot of people would think that this is actually a bad thing, turns out to be a great thing in Noto's eyes, right? Like student loans get canceled. Our personal loan, portfolio booms. Once we actually turn down into a declining rate environment, yeah, our personal loans might turn down a bit, but then we'll just jack up our home loans and student loan efforts. And right. This amazing balance in change in strategy is Noto's true expertise here. And I don't expect anything less from him at this point. It's just constant execution credit for him getting it right every single time.
And I feel like that flexibility is interwoven into their DNA as an innovative company, and more so as an innovative fintech solution that's going to be disrupting traditional players, right? Like, that is their bread and butter DNA. And they're showing it in terms of the flexibility that they have with their moves, especially when you consider, the prime example of this is student loans being canceled, pivoting their main profit centers to the other drivers of business, introducing supplementary products, promoting that ecosystem through SoFi Plus and other methods through the bank charter. And so just to build on that point, Tannor, they've shown time and again this flexibility. And this flexibility, more importantly, is perfectly synergistic with their brand offering as this innovative disruptor into a very traditional space.
I liked it a lot because I felt like it just gave people a lot of reassurance, because SoFi still is classified as a neobank. They're classified as a bank that theoretically could have a bank run if people feel unsafe. I think a stat just came out today that U.S. consumers took out $100 billion from banks last week. And we'll talk a little bit about how SoFi is doing maybe on the deposit front, but to get $2 million insured. And again, he said 90% of people, obviously, even though they're under the 250K limit, most people don't have 2 million, but just the understanding that reassurance is there, hopefully should drive up more deposits and let people know that although SoFi may be suing the government, they want to get your money right and want to keep it as safe as possible.
So I want to clarify just some, clarity there for people's ideas. Like, whenever they say 90% of depositors are insured, it's actually 90% of deposits. And the importance is that it's actually so much less. It could even be somewhere along the lines of like 98% of people are insured, but the 2% are obviously, they might have 10, $15 million at that bank. So it's actually making up for so many people under a single depositor, right? So, yeah, 10% of deposits is like sort of how, the top 0.1% of America makes up for like 50% of the overall, stored wealth or whatever it is. Like it's sort of a little displaced. So deposits is a little bit more understandable because most people definitely don't have 250,000 lying around. So,
and so that's the interesting part, right? Like that surprised me. So the counter to that, I actually thought that the percentage of deposits that were going to be outside of that bound was going to be higher, like not 90%, but it was going to be more people out of that threshold and more detrimental to that cost benefit analysis. But since they have 90% of people within that threshold, relatively speaking, even if they are losing money on that incremental 10%, they counteract it with the gained new users from that move. But the reason why I thought that they would have more users or more deposits, let's say, outside that bound is because we know that SoFi has very strict thresholds and guidelines as to what they accept. And if you have the majority of your members that are making 160, 170,000 per year, presumably you would imagine that a large portion or even higher than what they reported are going to be outside that 250K threshold. So to me, it was a surprising number, but a surprising number on the positive side, right? Because it just shows that incrementally, it's more a publicity move than it is something that's really going to hurt them from a financials perspective.
Yeah, so I think it's also SoFi Money members, right? Like there can be a lot of deposits that if it's separated into their brokerage accounts and stuff like this is under the SIPC. So they have another $1 million of coverage that they might have in some investment account that would be separate from their actual money accounts of what they would be storing under the FDIC. So yeah, who knows what the affluent person is doing? I mean, it is purely deposits, right? People that are simply just looking for 4% on their money. And I think the higher up you go in terms of, affluent clients, they're not storing their money with SoFi. They're probably putting it into something, potentially even safer in a way. It's like T-bills, something like this, where they can still get very high rates. They don't have to pay any of that to SoFi. There's no spread difference, and they can control it all on their own in their back end. So, yeah, who knows? But yeah, anything to say that, or let's move on from this 2 million FDIC.
You guys want to go to the Zell integration?
Yeah.
Okay, Riley, this is yours.
Yeah, so this is really cool. Before we went live today, I got a message on Twitter from somebody that follows us very closely. His name is, I think it's Brad. But anyway, so he got an update for SoFi that not a lot of people have yet, and this is what it is. So it's a UI change for something specific in the banking sect of the app, and it used to look a lot less cool than this, but it gives us a really cool. It looks like they're setting up for Zell Payments, is what I'm trying to say. And if you could see on the right hand side, whenever you look at your contacts, it also gives you some literature on how to use Zell. So we knew this about a month ago. Binder 9000 saw that they were doing some tests on it, but now it looks like they're getting ready for a rollout. And if we listen to the video that we just watched earlier, Anthony notices we have a few things coming out in the next few weeks, one of which is the 2 million FDIC. So that's only one of the things that is going to be coming out for sure here in the next few weeks. My guess it's going to be Zell, but it's anybody's guess. This is going to be really, really, really awesome for a lot of people that have been asking for this for a very long time.
Yeah, and just to answer one person in the comments who asked, what is Zell? Zell is a peer-to-peer payment system. And what it does is it allows users to send and receive money from their bank account using just their email address or their phone number. It's integrated with a lot of different websites. And so it seems like SoFi is also going to be offering it. Basically, users can send money to friends and family. They can split expenses. They can pay bills. It's designed really for just fast and secure and easy to use transfers.
Secure has been a fun topic with Zell lately, but no. What I was gonna say though, because I don't have Zell, I think in one of the earliest episodes here in the SoFi Weekly, I think I called it Zelly. But I mean, here in Canada, we just simply don't have it. So I
We have
didn't know anything about
Interac.
it.
It's the
Yeah,
same thing
we
as
have
Interac.
It is
Right.
it is interesting how Zell came about. This was predominantly made just because Venmo kind of like started this whole instant payment thing that took massive market dominance, and all the huge traditional banks in the US said, hey, let's band together and make our own payment network so that like nobody can compete with us. So Zell was made a few years later. There's a lot of fraud claims on the technology. A lot of people use it to scam other people and use it nefariously. So all these big banks start paying money, but I guess it served its purpose.
Yeah, who was it? I think it was Bank of America that really caused an outrage, I think last month, where people were lining up to the bank and they couldn't get their money because of an error, which later we found out that was an error with their Zelle integration. And yeah, so it is the best that you guys have for Interac, and SoFi is now integrating with it.
But so I guess the difference is versus Interac, and we should stop talking about that because no one's going to even know what that is, I don't think. But is that there's an actual app for Zelle, though, correct? Like it's a little bit like Cash App where you can add all the names and everything, but it's also like not a digital wallet because you're just connecting, your bank and then your friend's name. Is that sort of how it works?
Yeah.
So
it's not. You can download the app if your bank does not support Zelle, which SoFi doesn't at the moment. So if I'm a SoFi user and I want to send money to somebody, everybody much rather get paid through Zelle because it's the easiest, because it's the most widely used and everybody has it. So everybody wants to use Zelle. So that's one main problem with SoFi's offering, is it doesn't support Zelle. But you can use Zelle. It's just harder to sign up and get it to use. You have to go to the Zelle app. You have to put your phone number in. You have to put your account number and all that stuff. Whereas all you have to do to use Zelle on other banking apps like Wells Fargo or Chase, all you have to do is put your phone number in and put the person that you want to send the money to and put their phone number in, and that's it.
Do you know if there's fees with Zelle, Riley? Because I know with Interac there is none. So
there's none. I could be wrong. I don't use Zelle that often. I moved away from my bank, Wells Fargo, back in 2021. So, but this is
sure.
No, go ahead.
Sorry, go ahead.
No, you're fine. I'm just gonna derail.
I was just gonna say, I'm sure there is fees. It's just not customer facing.
Actually,
right?
I just asked ChatGPT. It says Zelle itself does not charge any fees to send or receive money. However, some banks and credit unions may charge fees for using the service and certain types of transactions.
Yeah, Zelle never charges shit, bro. I pay for my haircuts with Zelle. Like,
Cool.
It's always been fine.
Yeah, but I'm sure they're making money. Like, it's not a free service. So I'm sure the bank is paying for those integrations. Like,
we got someone from Nigeria. He says, please keep using Zelle. That's cool.
Yeah, dude. Someone said a really funny thing up here saying that can you use Zelle to pay your shooters, which is a little bit of a
dig at Square.
yeah, dude. That short report was so goofy. I've never seen anything so dumb in my life.
They want a 70% decline from that report, bro. That's a $10 billion market cap. That's not happening.
They want a 70% decline because 50%. Okay, so first off, they only talked about Cash App, which is only half their business.
Can you back up and explain this? Because I'm kind of lost, and if I'm lost, I'm sure.
Okay, so Hindenburg Research delivered a short report on.
Do you know who Hindenburg is? Riley,
research company. I don't know.
They do short reports, so they've done short reports on like Nikola was their most famous one. Basically, they release
really?
these big research reports, and it's always going against. I think
fun.
who's that
Salacious.
Indian billionaire? He was the most recent one.
Adani.
And they spend years making these reports, Riley, with the expectation that when they release them, the public will dump the stock because the report is there.
That's awesome.
Well,
that's really cool.
The
I see why they call it the
investigators that
Hindenburg.
Yeah, exactly. The investigators that did this 2-year report on Square was terrible.
Well, Square actually came out and released a statement around it saying that they've combed through the report, and the report actually had some factually inaccurate metrics that go against what Square has publicly put out there, and was targeted to basically smear their name, and that Square is going to be, or Block, I guess, is going to be pursuing some repercussions with the SEC. So
yeah, but you know what? So Adani said the exact same thing. So I mean that is the go-to thing to say. And I think the stock the stock Riley went down a ton on this report. Is that they came out saying that they were doing fraudulent things. They were trying to get criminals onto their platform, or this was a platform for criminals. Saying that because they had songs that were promoting Cash App, saying like, I pay my shooters and stuff like this. And they're like, Cash App is trying to get you to buy contract killers on their platform. It's so dumb. It's just rap music.
Ridiculous.
Like, it's just, yeah. And there was just so many things. They said there was a gang in Los Angeles or something like this called the Cash App Gang. Like, as if that has anything to do with Block Incorporated. Like, who cares? I'm going to name I'm starting a gang. We're going to be the PayPal gang. Hindenburg's going to do a research report. Anyway.
PayPal Mafia already exists, so you got to be careful.
Oh, that's very true. That's so dumb. So
it was a bad
maybe
report, he spent 2 years. I'm like, you spent 2 years and this is what you come up with? There's so many regional banks that are about to collapse, and this is what you come up with. Like, it is
yeah. Because it was such an old report, they were bringing up stuff from COVID that had completely came and gone. It was nuts. They were talking about how the social insurance numbers, they only took, partial numbers, and then they go, well, that's been since fixed, but still we're having a problem with it. Anyway, that's not here nor there. I just
Vadim says that don't forget they're also claiming Square inflated their member numbers. Yeah, this is bad. Now the ironic thing is, if their member numbers are lower, their average revenue per user would actually go up, which is actually
which they didn't want to talk about.
But obviously, if investors are betting that the platform is growing and user growth is the metric to identify that, and user growth is incorrect, that is bad. And we all know every company lies about their users. But it's on average like 1% to 2%. It's usually off. Twitter, Facebook, all of them, because they can't literally get it completely correct. But they were saying 40% of
Twitter was way off than 1 to 2%.
No, Twitter wasn't way off. Twitter wasn't way off. I saw the numbers. There's a TechCrunch article. Twitter was off by 0.75 million. So
wait, before Elon took over?
Yeah, before Elon. So Twitter, the problem that Twitter did is, if you have 2 Twitter accounts on your phone, Twitter, and you log into one of them and the other one's like a burner account, Twitter will count that burner account as a DAU and a MAU, even if you never went into it, but just because it's registered on your phone. So that created a discrepancy of about 750,000 to 1 million DAUs and MAUs for like 4 years.
That's it?
Yeah. But it wasn't enough for like investors to be like, oh, you guys scammed us because you said you had like 40 million more users than you did. These guys are saying Square has 75% fraudulent users, or like fake accounts on the platform.
Okay, well, here, let me bring up a great point. One thing is that if there was a lot of fake accounts, part of Twitter, who created Twitter and who created Block Incorporated? Because it's the same dude.
That's a good point.
So, right? So that was the only thing where I was like, if anyone's going to do it, it's Jack Dorsey.
Vadim says, even though revenue per member is high, do you know how much a contract killer charges?
Yeah. But I think the biggest part that I didn't like is they were talking about, like you said, a potential 50% of users could be fake or something like this. This is going to drastically affect cost per acquisition, or customer acquisition costs. But like you said, that also goes counter to revenue per user. So that's a completely null and void point. And then also they said that the stock price was going to drop more than the amount of fake accounts that they actually thought was on the platform, even though, like I said, Cash App is 50% of their business.
Yeah.
Okay. They had not a single point on Square Seller. So
Yeah.
you're saying that 25% of their whole business is fake, and that's going to lead to a 75% decline. Okay, Hindenburg, I wonder how, like, what is your bet on this thing? Like, let's see the capital behind, this actual short sale before you posted this article. But
I really tried to give the report the benefit of the doubt. Like, I really digged into it, and I was just like, I can't. They said some stuff about the Afterpay acquisition, but there's nothing really there that makes you think, man, like,
dude,
Donnie report was bad.
Find me a single soul that thinks that Afterpay acquisition was a good deal. There's no one that thinks that's good. This is not a Hindenburg exclusive. Okay. Yeah. It's priced into the stock right now. They paid $29 billion for trash. Okay. It's completely priced in, as if they took 2 years to find that out. It's a ridiculous article.
They bought it in 2021 too, when 28 billion didn't seem like a lot, but obviously now today it's crazy.
Yeah. I'm sure they could get Afterpay for probably 8 billion or something, or even less than that now.
So we don't think that there's going to be any negative backlash on Hindenburg on this report
to SoFi?
Not legally. Oh, I think to their reputation.
Legally, yeah. No, I meant legally. Because I mean, they've done this so many times, man. Like, they've done this with, I think, Nikola was the only one that they actually hit, and then everybody else has just been,
Well, here's the thing. Legally,
no, Adani was a really good one.
Yeah, and also legally they have a case if they cash out, right? Like, if it was down 17% and they made 70% of their money, and even though it's a bullshit report, but if they're waiting for 70%, I don't even think Square has to take legal action. It's it's just not. Your short's gonna get destroyed. You're not getting to 70%. Square is not
I think
a $5 billion company.
Yeah, one of the commenters had a good point. Look what happened to Citron. Do you guys remember Citron?
Mm-hmm.
To Andrew Left's firm, another short seller firm.
Short seller that stopped going short.
Yeah, he was short on GameStop, right? Citron was.
Yeah.
I would buy the dip if it was 75%. Yeah, like if Square falls another 10-20%, I am buying that immediately. I mean, Square's a good business, bro. They are not a bad business. And they're
are they in cahoots? Excuse me. Are they in cahoots with Apple and Android for being the #1 finance app for the past 3 years?
Right.
Are they does Apple know and does Android know that they're faking accounts, but not multiple accounts? There's only one install. So I don't know. It's such a silly article.
Do you own Square, Tannor?
Up a lot of the facts. Yes.
Okay.
Yeah. So take that with bias, right? But here's another thing. Okay. They also spoke about how Jack Dorsey, a lot of members or management team, sold $1 billion worth of stock, back during COVID time. The stock was $289 a share. Yep. Okay. And people are going, look at them, how much they were selling. It's $60 today.
And now you want to short it.
Yeah, I know. It was a little bit silly, but
all right, let's get back into some SoFi. Lawsuit backlash. Riley, introduce us on this one.
Hard pivot.
You're muted, Riley. You're muted.
I wanted to talk about FedNow.
Yeah, if we could talk about that right after. So just there's still some SoFi backlash from the lawsuit. I don't want to spend too much time on this because we've talked about this a lot, but these are a few tweets that I saw recently. Both of them have a lot of views, and the sentiment in the comments were kind of similar. And yeah, just it's pretty bad. People don't like SoFi.
It just seems like old news at this point.
Yeah, I feel like it's dying. I saw a TYT clip. For those that don't know, this is a very progressive YouTube channel. And
Young Turks.
Young Turks, yeah. They criticized Anthony Noto, but I mean, of course they're going to criticize him. He's a billionaire, right? But I don't know. I think the news is dying out. So probably not the biggest thing.
We can go to FedNow if you want, because I have a little here, I'll show my screen.
Yeah, share your screen, and then we'll do the Vadim tweet.
Okay, so on April 1st, the federal FedNow is going to start certifying banks to use FedNow. What FedNow is a way for banks and financial institutions and businesses to send money instantaneously in the United States, which is kind of unheard of, which is a really huge step for the way that the US's money like works. And it's starting in July. This is going to have like huge.
Sorry, is this basically not just like Zell?
Kind of, but
Like
it's by
Zell
the federal
provided by
government.
the Fed?
Yeah. So like if you look at the way that you send money, if you look at the top left corner, that's you. You send money. Your bank authorizes it on your behalf. And the old way, you would take the top function where it would go straight to the other bank. Instead, FedNow is kind of like an authenticator that just makes sure that everything is standard, and then if it all passes inspection, it will just instantaneously be in the other person's bank account, which is probably going to have a lot of like really good benefits to business in America if we're able to like move money faster. So this is like really cool. It's probably going to affect SoFi in a good way. I don't know. There's a lot of arguments that it's going to make a lot of competition a little bit more competitive for banks. I don't know. What do y'all think? This is going to be big though. Like,
Amit, can you throw up Vadim's comment? What do you guys think of this?
FedNow could have saved SVB.
Yeah, I heard about this.
They went insolvent because a loan they got didn't reach before the FDIC took over.
Wow.
Yeah, it was kind of funny how they were in talks with two separate, sorry, what do you call it? I don't know, government contacts. They were in contact with the Federal Reserve to get the loan in place, and then they were also in contact with the FDIC. But the FDIC and the Federal Reserve had their own, I guess, agendas. So FDIC shut them down. Federal Reserve was trying to get the money, and yeah, we know who won. But what do you guys think about this FedNow? Do you think this hurts SoFi's business because there's a potential that this is a portion of what Galileo does? Do you guys think that this helps SoFi because allows people to onboard digital payments much easier and reduces the need for cash? This is probably go next to CBDCs and
if anything, I think this this change in how money works in the US is probably going to push banks to modernize quicker because their back end is going to be bottlenecked even more. I'm not sure how technically, like I don't know banking infrastructure at a deep level, but if payments become instantaneous, I feel like the what we've been talking about when it comes to all these old traditional banks like Wells Fargo and Chase, they're going to have problems, and it's going to be more expensive to hold things. I don't know, Tevis, you could probably speak to this, considering like Kubernetes and whatnot.
Yeah, so it seems as though it's just built in house, leveraging just APIs, messaging services, and just data analytics in general. I'm just looking at some online. It uses ISO 20022 messaging standard, which is basically, it just provides interoperability and standardization. So it seems as though the infrastructure is pretty flexible and modern, which kind of surprises me because it's built in-house by the Fed. No, I would imagine that they would just outsource it to some company. And so that's why I was looking. But you know what? I honestly think that this is one of those things that I think just raises, it's the tide that raises all ships, because whatever business it might take away from Galileo, I just think that Galileo also being a modern and flexible infrastructure technology stack can be the first to adapt in terms of plugging itself in and latching to this FedNow system. Like if FedNow is going to be, let's say, the network by which these transactions happen, then Galileo can have add-ons and it can have different functionality that latches onto this. Even still, I mean, I don't think that it's going to like, yes, it would hurt us in one sense because we are now not the actual network itself, but there's still no real other competitor that can provide all of the things that Galileo can. And so I think that it will be something that is, supplemental to Galileo's services, where everybody is now on this modern infrastructure through FedNow, where, payments, real-time payment services are involved, but Galileo will still have the flexibility and the functionality and the infrastructure to enhance that process for a lot of these larger institutions.
I don't know if this is going to take anything away from Galileo, because from every like Clay Wilkes interview that I've watched in the past, which is the former CEO of Galileo, he talked about like instantaneous payments are coming, and we're like the most prepared. So if anything, I feel like this is going to be a shift. I mean, SoFi is going to be way more prepared than other banks because they're just cloud native. They could be faster and, like you said earlier in this pod, like more agile. I think the old banks that have like really bad infrastructure and they can't move money, like it will be really interesting if you're able to move money from SoFi somewhere else really quickly. But in Wells Fargo, you can't, because they have to move internally. It takes time for the money to move. Whereas FedNow can move it from like one place to another place, but like internally, it probably takes Wells Fargo a lot of time to like send out these payments and stuff. So it might actually just like really show the lacking infrastructure that other banks have compared to SoFi or other cloud banks.
Right. Yeah, and don't forget that Galileo is also offering a bunch of other services, right? Like we do help with a lot of data analytics, fraud detection, the source of other APIs that they could use. And I think this might actually be why they have been pushing things like, Connecta, or a lot of their Technisys operations is just that stuff is all still going to be very needed. But who knows? Who knows?
Yeah, and like, don't forget, guys, like there's a lot of different avenues where Galileo can plug in, right? It can plug in with the user experience, right? There's customization there that Galileo can provide on that FedNow infrastructure. It can plug in with fraud prevention, right? Galileo has advanced fraud prevention at the moment, and it can enhance the security of that FedNow system. It can help with reach, right? I mean, I think one of the comments was that, FedNow is only in the States, so it can help overall adoption in different markets with the service. It can help with other integrations in the existing FedNow infrastructure. So there is definitely different avenues where Galileo can help sort of level up the FedNow infrastructure.
Right. Is there any other SoFi news that we have?
We've got Vadim's tweet.
Great. The person we were just talking about.
All right.
The fifth horseman of the podcast.
Do you think he would ever come on one day and just talk?
No. Because
He's
I've asked him
definitely-
100 times.
He's definitely pretty active on the Discord. I guess that's the segue to plug the Discord.
Yeah, I'll put the Discord link in the chat. All right, Tevis, you can introduce this. I'll put the Discord.
Yeah, so basically this chart was initially put up by Michael Burry, and what Vadim did was he added SoFi to that chart. And the chart just shows you the unrealized losses versus the deposits above 250,000 as a percentage of total deposits, and where all of these banks sit in relation to this. Why is this important? Well, 250,000 is basically what the FDIC insures, and Silicon Valley Bank, Signature Bank, a lot of these other banks had deposits far in excess of that 250,000. So they were vastly uninsured by the FDIC according, to that. So Silicon Valley Bank had like something like 97% uninsured deposits. And this obviously causes a lot of panic. People will withdraw their money and cause a bank run. Why? Because if you come out and you're like, 97% of our deposits are uninsured, then chances are if you have money with that bank, you're like, screw this. I want my money to be safe. And so I'm going to put it to another financial institution. And so here in this chart, we can see SVIB at the very, very top right quadrant, Signature Bank of New York, SBNY, Pretty much an outlier there. FRC, another bank that was wobbling, definitely towards the riskier end. However, you can see SoFi here with not a lot of deposits over 250,000, so pretty safe. And then SoFi without unrealized losses as well. So this chart, what it's doing is it's visually representing how safe SoFi is versus a lot of these other banks from a depositor security in relation to FDIC insurance perspective. And a lot of this, I mean, this visualization was really helpful, at least for me and a lot of other people on Twitter. And I think this tweet from Vadim did really well from just awareness perspective. The reason being because it goes along with everything that SoFi is saying, with the increase in APY to 4%, with the 2 million FDIC insurance. It's basically signaling that the other bank's weakness does not signal SoFi's weakness. It actually highlights SoFi's strengths.
Yeah, Chris did an amazing article on that on Seeking Alpha. Very similarly. One of the things I find really weird is that a lot of these companies, or a lot of these banks, can hold some bonds or assets that they have, that if they're holding them to maturity, that they don't actually have to show any unrealized losses, right? Because even if they are losing because they might have got repriced because rates actually went up, that they don't need to show anything. But whenever you're seeing what we're seeing right now, $100 billion leaving the American banking institution right now, is that you might have to sell those to actually pay the people that their money. So the idea being that hopefully this sort of gets rewritten. Anthony Noto came out, said that they hope that it gets rewritten because they already show fair value on a lot of their loans. So even if they do hold them to maturity, which they're held for sale right now, regardless, most of them. But even if they do, they still show fair value. So they don't really have this problem. He made it very clear that we are not like any of these banks. And this chart absolutely shows that. Right. I think they said they had a securities portfolio of $185 million, which is nothing. And the actual amount of unrealized, losses on that was like 8 million or something, which out of their total portfolio, I think was 0.2% of their overall portfolio. So absolutely nothing compared to what we are seeing, in the rest of the banking industry. And this is part of us being a new bank as well, though.
Okay. Not bad. I think the last thing we have here is a video of Noto talking about why this is why future banks are going to use their tech. So we'll react to that, and that's pretty much it. And then, so after this video, we'll have 10 to 15 minutes of Q&A, so you guys can start lining up your questions about anything SoFi related, and then we'll get to that.
What I did want to ask was, are you starting to see the momentum of the cross-sell between Technisys and Galileo? Any examples you can share on that?
Yeah, we're in conversations with big, large financial institutions. We just weren't in conversations with them before. We didn't have the complete stack. Banks are really challenged to innovate. The cost of their technology stacks is just growing exponentially, and their businesses are not growing exponentially. So many of them face the issue of having old cores, old technology stacks. Competition from new entrants and innovative products is increasing, not decreasing, while their costs to actually compete are exponential. So we have ongoing conversations with a significant number of financial institutions that we didn't have a complete solution for before. Having Technisys and having a multi-product core, having SoFi in the cloud, and the other investments that we've made in functionality has been really differentiated. I'll give you an example. Pay in 4 isn't something we're out pounding our chest about. But if you go on the SoFi app and you sign up for Pay in 4, you could do it on your phone as a checking savings account customer if you do direct deposit with us in less than 2 minutes. And you have a card there with a number you can use online. You can use at a register using your wallet with your phone, whether that's an Android phone or an iOS phone. That's completely built on our technology stack. It takes about 6 weeks for someone to launch if they want to. Because we own the whole stack, we built it end to end. We can do checking and savings now end to end. We could walk into a big consumer brand that's not in the financial services sector. Maybe they have a credit card and say, you have 20 million customers. You can offer them XYZ brand checking and savings. We'll build it for you. We'll launch it for you. You market it to your customers. We'll give you a revenue split. So we have the capabilities to help big financial institutions and big, large companies. And the inbounds and the pipeline is very strong. We haven't announced any of those deals. They're going to take longer, but they're going to provide much bigger, durable relationships with significantly more revenue per dollar of cost. The things that we've actually driven success with in terms of dollars, Connect has been a diamond in the rough. This is a natural language AI customer service technology. SoFi itself does RFPs when we want to look at new technologies. SoFi picks Connecta from Technisys as the natural language AI capability that we wanted. Paying for something we're in market with right now and have gotten a really positive response from that. But we'll continue to innovate with both products. We launched a fraud product that leverages the combined data of the overall company and the integration of Technisys and Galileo as well. And that's also been a good opportunity for us to add attachments to existing customers. So bigger customers, more in the pipeline, and more attachments of single product solutions on top of those big businesses.
This is why I like SoFi. That's cool, bro. That is so cool. The fact that they're helping other financial institutions and being the back end for them and diversifying so much from just being a company that gives out loans. I mean, that's the exciting part about betting on this company at this stage.
Man, I'm telling you that I think it was one of the best fireside chats that have happened, probably all year. I mean, like trailing 12 months. Like they give us so many good pieces of information in that call. And most notably, I thought what was really cool there is he said, we've been reaching out to all of these retail platforms. They might have 20 million cards, right? But they don't have checking and savings. We can offer that end to end now. So we could just say, hey, upload that. We haven't announced any of those partnerships right now. I guarantee you they already have some in the works that might have happened this quarter, might have happened before. Here's the thing too, they don't announce all their partnerships, right? You see maybe 3 or 4 new partnerships that maybe they're public about, and then they go, okay, well, we got 15 new people at the end of the year or at the end of the quarter, right? So how many of these large retail platforms do we already have on our books that we can just instantly swap over onto Technisys as well as Galileo?
I think that's one of the cool things that I've learned about SoFi since we started this thing is I thought at the very beginning we were just going to be selling technology to banks. But in this video, like Noto just said that we're talking about people that just offer credit cards. Like Target offers a credit card. They don't offer checking and savings. But Anthony and Noto could go to Target and be like, hey, like we could just set this up for you guys. In 6 weeks, you have 20 million credit card members. And if they sign up, you can start making money passively. So like, that's just something that sells itself. Like we don't have to be selling this directly to banks. We can sell this to anybody.
I'm happy you watched my video, by the way.
And I think the beautiful thing is how they're packaging it too. It's just, hey, there's revenue share. This is completely out of the box. It's plug and play for you. You don't have to do anything. We'll do it all. This is how it can add value. This is how it can help your bottom line. And so it just seems like a win-win across the board for these large financial institutions. And that's exactly the sentiment that they need to convey. The fact that, hey, we're not your competitor that's stealing anything from you from a revenue perspective. This is net new pie, essentially, that we're unlocking.
And he made a good point that large financial institutions don't have the infrastructure to be able to innovate like this at scale, which is why their business is not growing in the way that it needs to. SoFi's lean. They have the ability to do this. It's built in their culture. They have the acquisitions necessary to get this done. And again, it places them, as you said, Tevis, not as competition, but as partners. And like, that's exciting, man. Because if we see that scale to the logical extent that it can over the next 5 years with all the other parts of their business, it's just a question of how big can they be.
Yeah, and so I have the transcript up here, Amit, and it's sometimes easy to miss stuff. Like when he's talking about it, you sort of get the general gist, but you'll miss certain key phrases and words that he uses. But I mean, if you look through the transcript, then he talks about large financial institutions that they're already in talks with, that they've been in talks with for quite a while. He says, yeah, we're in conversations with big, large financial institutions. We just went in conversations with before. We didn't have the complete stack. Banks are really challenged to innovate. So they're already in talks with big, large financial institutions, right? And that might not sound as exciting, but then you think to yourself, what are the large financial institutions of the US? Well, they're the Wells Fargos, the Bank of Americas, the Citigroups, these could be the people that SoFi is already in talks with. And the interesting part was that really this was enabled by the cross-selling around Technisys and Galileo together as a bundled offering, because that's what the host really asks around Technisys and Galileo and the cross-sell. Amit, if you just scroll up, up, right there. Okay, so he asks right there. On the technology segment, what I did want to ask was, are you starting to see the momentum of cross-sell? Immediately, Anthony Noto says, we're in conversations with large, big financial institutions. We weren't in them before because we didn't have the complete stack, but banks are really challenged to innovate and they need this. And then he goes into that example that we saw in that video that Riley put up. So really, Technisys was a fundamental building block that was necessary as a prerequisite to bundle this together and to get them through the door for a lot of these big financial institutions that they're talking to. So I do think, my prediction all along, if we go back at the end of the year, was that 2023 was going to be the year that we see a huge logo become a SoFi/Galileo Technisys client from one of these big banks. And it seems
and we don't think any of the big four would be hesitant to do that for competitive reasons, or
to drop their logo, or to be a client?
To be a client.
Well, no, not at all.
Yeah. And again,
my belief.
If they're approaching this, Amit, just going back full circle from a collaborative, like this is net new pie that we're unlocking for you, and it's plug and play and you don't have to worry about it. And everything is sort of flexible and is scalable from an infrastructure perspective, and it's compatible with whatever stack you're on, then I just think that it's such a good offer for them to pass up. Now, from a logo dropping perspective, then, we can talk, because while it might be like, if you think of the game theory, it's either competitive or collaborative. While you might think of the inner workings being collaborative between SoFi and, let's say, Bank of America, them dropping that logo, the market might perceive it as some type of competitive, and it just might not be good from a PR perspective, from these banks leveraging a neo or an incumbent disruptor's ecosystem. Like, that's not good publicity for a lot of these banks. And so there might be something there, but from the value unlocked, I definitely think it's net positive.
One thing
Go ahead.
Sorry. Yeah, one thing he did mention was SoFi paying for, and that they're not necessarily banging their chest, but they're making sure that they get it right. But they're going to be able to sell that pretty easily. They could set it up in 6 weeks. It is super user friendly. Like, everybody that's used it on our own platform on the SoFi app say it's super easy to use. And then also, just like, nobody offers that. SoFi is offering something that nobody else has.
But you mean like they would be able to sell Bank of America a paying for product?
Yeah, you can do it like I said, like Target has like their own specific credit card offerings. They could make a checking account there as well and set up paying for. And like, I think bank checking accounts are going to like change in the future. People are going to be able to set up their own bank account because it's going to be easy, because SoFi can take care of it.
And the interesting thing about this, Amit, because you brought up something really interesting, right? They can set up their own pay and for. Well, from the overall market perspective, people are going to be thinking, wow, these large financial institutions are fighting back. They're also introducing a lot of the products that SoFi is offering. They're competing with SoFi, completely blind to the fact that SoFi is actually the one that's powering a lot of these solutions for these large financial institutions. So what we'll see as competition from, let's say, Bank of America's paying for to SoFi's paying for will actually really be just money funneling into the technology platform all along, right? So you're going to see the large players, if this theory is correct and they're adopting Galileo, you're going to see them actually putting up more of a fight from a product release perspective as well.
Yeah, so I think another thing too is that it's not just paying for. That's the route that SoFi went down with Galileo's product. But on the opposite hand, these banks can choose whatever they want. We have full flexibility with this buy now, pay later solution. It's just a pure, bank standpoint where they have the most amount of data, way more than an Afterpay or a firm or one of these companies that are just basing it off a single customer metric, or maybe even no metrics at all, even past a FICO score. If you have all of this customer data, you have some old client that's been with you for 20 years, you see all of their transaction history, especially with a credit card or something like this, offering that card, you'll know exactly how to price it. And that flexibility is completely offered through Galileo. So not just that, like you said with the Target thing, they could offer special rewards. Same thing with what they're doing with the card. And I do actually believe in that fireside chat, whenever they said, this customer that has 20 million users, I do believe that's a specific customer that he's talking about. I think we already have very large names on our account in general. It's just, I think, like Tevis said, they don't want their name disclosed.
That's
they
a
want to
feeling
keep
though,
the
right?
keys. Yes.
Okay, let's move on to questions. We got to move on to questions. All right. What do we got? All right.
Okay, wait, let me just clarify really quick. I just want to clarify. It is a feeling that I believe that we already have
not have sexual relations with that woman.
That woman.
Any woman.
Miss Lewinsky. All right.
Oh, that was mean, Riley. Wow, that's mean. Okay. Questions. So what do we got? And you guys can leave them in there. So when asked the question, we got to give like a 15 to 20 second take. So no ranting on these questions. All right. How many years till SoFi is a top 10 financial institutions, or will they ever be one? Tevis, go ahead first.
How many years till SoFi is a top 10?
I just read it, motherfucker. Just
sorry, I wasn't paying attention, man. I want to hear all 4 of your predictions. Top 10
again, 20 seconds. You don't have 5 minutes for this.
Okay, man, I'm trying to think. Hold on.
I'll go first. I think it's going to correlate with member growth. If we start like getting a ton of members, I think that's going to be a sign that it's SoFi's brand is being adopted and more people will come to the table. Once SoFi becomes really, really popular and it hits that critical level of success, it will be able to grow like insane. But I have no idea. Time frame, no idea.
Tannor?
I had no idea. 10 plus years? I don't know. I think it's so funny in this chat, people saying, oh, using the word we or something like this, blah, blah, blah. A bunch of bears are the only people that's saying that. Like, no, not even him, the nut picker guy. Also the guy that also said that he was selling or doesn't like the stock already.
Dude, his username is nut picker. Like, why are you like...
What?
Why are you even like, acknowledging
no, I like Tanner getting frothy. Go ahead, Tannor. Do what you got to do.
You and Brian go create your own podcast and talk amongst yourselves anonymously. I love all these people that flame me on Twitter and stuff like this. They got no profile picture. They've got 6 followers. They've got no other tweets other than retweets. None of their own opinions. Okay. Do something other than be in this comment section down below. It's unbelievable.
Bro, I love it. So
I'll use we. I'm a shareholder. I own this company.
Yeah, real quick, let me answer the how long financial institution question. I agree with Riley. It depends on member growth. Hopefully a decade, and we'll see them get there, and hopefully there's upside before that decade comes. I agree. We is not cringe because you own the freaking company. You are a shareholder in the company. You think Anthony Noto would be mad that we're talking about we as shareholders? No, we're shareholders, and
I think America changed me.
I don't think it's going to take a decade, honestly.
You don't think it takes a decade? You think it happens in 5 years?
It may between 5 and 10, but I don't think it's going to take that long. Like if we assume the rate of growth for members and extrapolate that out 5 years, then they're looking at some pretty big numbers.
Extrapolated how over 5 years?
But we're talking about JP Morgan, Bank of America.
Just assume a linear rate. I mean, it's going to drop off, of course, but we're also like the counter argument is like SoFi is leveling it off themselves, and so they're presumably even going to expand the FICOs a little bit and go a little bit more risk on as the market turns around. I honestly think, maybe 7 years. I don't know. Maybe that's overly bullish, but I don't think it's going to take more than a decade, honestly, if we go at the rate we're going.
All right,
What's
we will
the
see.
CAGR for that? Like,
But right, okay, so we're only like when you guys say 10 years, I think you're only thinking about SoFi's business. Like Galileo is going to take the fuck off.
Hopefully, right? Like that, you got to be
Hopefully,
right on that. So, okay, Kevin Tanner, check your LinkedIn requests because you have to accept them. So
I don't have LinkedIn.
Also, I don't
Just,
know how.
just
I don't
some
know how
random
you
guy gets a request.
He just likes some guy named Tannor. I don't know.
Okay. How does SoFi compete when the tide rises for all of the banks? How do we differentiate when all the banks have the same innovation features? 20-second answers.
how are they going to get
mean,
the same innovation features
Yeah,
when
look,
we're the only
okay.
ones selling it?
Right. So SoFi is not burdened by a lot of these legacy infrastructure costs that big banks have. So what did you see when the Fed raised rates? It raised rates for everybody, but Chase or Wells Fargo, all these guys are still offering 0.1% APY on their checking because SoFi is not burdened by a lot of those costs, and because they're actually trying to be in member growth mode, not in like reaping all the profits mode. They can react faster and make more beneficial changes for their end user. And so even though the tide will rise and fall for all other banks, because SoFi is built on a new stack and they're nimble and flexible and innovative as a company, like we mentioned at the beginning of this pod, they can react faster, they can do more, and they can win more because they're taking more advantage of those rises and falls.
And truly though, like look at all of the big banks, okay? Or even I'm trying to exclude a little bit out of the small fintechs, but there are very small things that differentiate the big players, right? They all have the same products. The advanced charts might be a little different depending on certain features and the layouts and these sorts of things. But in terms of their lending products, a credit card offering, all of the checking accounts, multiple savings accounts, investing accounts, it's all the same, right? The differentiation between SoFi and the rest of those is we're saying, no, you can still differentiate, but we're still going to allow you to price differently and do all of your different risk factors and everything that's also a part of banking. We're just going to allow you to do that faster without having to worry about the back end nearly as much. Okay. Sort of be a much faster system. So the way that SoFi differentiates itself amongst all of these other players that already have similar backends as it is, they're just not up to date, is that we're going to be taking the fees and we don't have to pay for our back end because it's a part of us, right? It's one of our subsidiaries. So I really don't see the big differentiation in finance as it stands, let alone where we're going to be in 5 years from now, whenever people are starting to switch.
Okay. Who is Tanner's hairstylist?
Late me rubbing my hand through my hair.
Okay. Is
that's
Tannor still drying off from last week's swim?
Yeah, I got heated. It's really hot in here. I got no fan.
Okay. How do you get the 4% APY from SoFi? Just set up a direct deposit? I think so. Yeah. Just set it up.
You have to keep it in there for a while, a couple deposits.
Do we think a reverse stock split is on the table? I think all of us agree no, this is not happening.
Yeah.
Did you, Tevis, really quick, did you see that Wealth Simple got 4% APYs here in Canada?
Did they? Didn't Robinhood raise it to 4.4?
Yep, today.
4.4 for their gold.
Yeah. How did we not talk about that as well? Dude, it just seems as though, this is the scenario where it's a perfect competition that ultimately grinds down a lot of these players because they're competing with each other, and the final beneficiary is the end consumer.
Yeah.
SoFi raises at 3.75, Robinhood goes 4. SoFi, 4.25, Robinhood goes 4.5, so on and so forth. Incrementally, they all get fewer and fewer profits. People are the ultimate beneficiary. Oh, look at that. Nutpicker just donated $3. Thank you, sir.
I'm giving these $3 to Tannor after this. Tannor, your rant inspired this.
We, as SoFi investors, appreciate it. Thank you.
Just so everyone in the audience knows, he's not going to give me that $3 because the dude already owes me 5 SoFi shares for jumping in that pool.
Oh no, all of us owe you 5 SoFi shares. We gotta.
I'll take it.
Okay,
I'll take it.
You said
I'm unemployed right now. I didn't know that.
Oh, Riley, we made a bet. We said we would do.
No. Hold on. I have it in the highlights video because I edited it. This is front and center in my mind. he said, I don't even want the shares. I want the sub more because somebody
that's
said
true.
it's the shares.
And
or
you got a bunch of subs from that. So
there you go.
Thank God.
that is true.
You know what? I did get a bunch of subs. Thank you, everyone. I appreciate it.
Why hasn't Miss Switch's banking and stock trading to SoFi? Because the SoFi stock trading app absolutely is garbage. I will continue to say, but I would never buy Robinhood because the past hour we talked about SoFi's potential. I mean, Robinhood has none of that. And also the banking, they don't have business bank accounts, and I have a business bank account because I have.
And to your point, Tevis and Amit, when we're comparing Robinhood and SoFi, the APY competition is very, very close. But if you really stretch out the timelines to 5 years into the future, where Robinhood only offers brokerage services and
It's nothing.
supplemental
It's nothing.
stuff.
So a couple things.
nothing.
Robinhood, you have to be on gold, and 5 years into the future, you're never going to see a 4% APY because
Unless
rates are going to come
GameStop
down.
goes
What
to
I'm saying,
300,
though-
Robinhood is irrelevant. They need a meme stock mania to happen. Their monthly active users are
Dude.
declining, the transacting users are declining, and the average cash per account is declining. Like
I
it's
just
just not a
think
good business.
they shot their brand in the face with GameStop.
Yeah.
What I'm saying
a
is
business
there's no way Robinhood is going to be able to compete with SoFi in the future because SoFi is going to be making money from so many more different ways than Robinhood could ever hope to. Like they're not going to be able to spend as much money in R&D. Not as going to be able to spend on a lot of things because SoFi has a bigger base. Like they're going to be able to build up.
Careful with that though. Don't ever test, Robinhood on how much they can spend on R&D because Robinhood will show you up on that. They will spend a lot in R&D.
No, but
what does it get them?
But Tanner, you would agree the fundamental value proposition to that as a business is payment for order flow. So how much R&D are you going to do to increase payment for order flow revenues? Like it's not a good business to own for the next time.
I'm saying more of a joke. You don't want to be spending high R&Ds if you don't have to, if you're not if you're not building some amazing product.
That's why SoFi is so
Vlad
awesome because their
Teniev-
R&D is free. SoFi app, everything that we build for SoFi app literally helps Galileo and Technisys sell to other banks. Because every
that's not
product
true,
that we
though.
put into SoFi app, other people could buy from us.
Have R&D. We have R&D. And,
Yeah, I know,
and
but
it's still sizable. We're paying for Galileo engineers. We're growing, our workspaces, our head counts. So, we're still going to see
Hoiger in the chat. He said the difference is SoFi gives 4% and doesn't make much.
Hager,
on it.
mofo, it's Hager.
Oh, Hager. I'm so sorry. It was like Hoiger.
He says it every time.
Hey, yeah,
Every time.
I'm sorry, Chris Hager. I don't know how Robinhood is funding that 4.4%, but I'm pretty sure they aren't making money. Yeah, I have no idea how Robinhood's giving me 4.4%.
They're renting a charter. So they just have deals. Good? It's what PayPal does. It's what Block does. They're taking your deposits and they're giving it to a bank and they're saying, "Hey, you better pay me for that or else I'm going somewhere else." So they are making money on it. But obviously not as much as actually owning a bank because we don't have to pay anyone for it. It's ours fundamentally.
Okay, let's do Gabe's question. Do you evaluate SoFi like a bank? If so, what's the lowest possible price to book where not owning SoFi should be criminal?
We're like at 1 price to book or even under 1 price to book.
Yeah.
Even if we don't value it as a bank, like it's pretty cheap. I mean, we don't value it as a bank because it's in a different stage in its life cycle, first of all. And it's like high growth mode. Like it's more relatable to a fast growing tech startup than a bank is, because of the products that it introduces, the different lines of business, the sort of cross collaboration of all those lines into a singular ecosystem, the growth rates, the member growth, revenue growth, and the fact that it's unprofitable, quite frankly. So a lot of the similarities are, you can make a case that it's way more, to a tech company than it is a bank. But even if you would compare it to a bank and you just do price to book on one side and you do growth rate on the other side, SoFi would be the best bang for your buck, I would imagine.
100%.
Okay, wait. I want to just speak on that. I just want to say the price to book thing and then also what Throwable just said. So the price to book, I think one times would make sense because we're a growing company, right? If we were a shrinking company or we had some risk to our overall portfolio that would state that, under a single, well, here's the thing too, is that our price to book ratio is not necessarily tangible price to book ratio because we have stuff like goodwill because of our acquisition of Technisys. But even then, for a normal price to book, I would still say 1 times because we are growing so fast. Look at our loan portfolio, for example, just as one metric. What it was a year ago, I think it was 6 point something billion to today. I think it's 13.7 billion. That's a massive difference. And there should be at some point, whenever you're valuing a company for its future growth, you should give it a multiple on how much you're expecting because it's continuing to grow. And I think that will catch up to SoFi. I just don't think it's the right market. No one wants stocks, first of all, tech stocks for second of all, and then now financials, bank stocks. Like, no matter where SoFi turns, we are going to be valued on the worst end of whichever sector is getting hurt the most, in my
Tannor,
opinion.
what was their revenue growth in 2022 compared to 2021? Do you know?
Sorry?
What was their revenue growth compared to 2021, if you have it on the top of your head?
This quarter was 51% year over year. I don't know what it was for 2021. I think it was probably like 60 or something like that. It's been going down in terms of revenue growth.
Gotcha. Yeah, that's interesting because as you said, it's a $5 something stock, 51% revenue growth year over year. We talked for the past hour of all the different potentials, and we're not just pie in the sky potentials, but like legitimate places where this business can actually start to scale. It's like, I don't know, it's starting to look like one of the best things in the stock market.
And SoFi is getting to the point where they have the best banking app in America, like so close. Like I've gone down the rabbit hole of looking through all of the banking apps, talking to people that have all the famous banking apps, and SoFi offers more or will offer more within like a year. It's just like SoFi offers so much. They're already almost like at that point where they're the one-stop shop, like compared to everybody else. Like we're already there.
And then you got Noto. It's like this is kind of it's starting to become a no-brainer, And I'm not, obviously I'm biased because I'm a shareholder, but if we break it down logically, and we've done plenty of podcasts on the bear case, plenty of them, right? And a lot of them go down to loan delinquencies, which I think most of us have agreed logically is likely not going to be that big of a deal. Deposits increasing, as what Noto said in that fireside chatter. He said that he's seen deposits increase, showed us that consumers are more likely to go with SoFi because they like the brand or whatever, even if FRC is collapsing. It's exciting. It's exciting to be a shareholder right now.
If you separate any of our businesses, and wow, this should be a video idea, but if you separate any of our businesses, you guys are getting an exclusive, and just look at us from a lending or money/investing side, right? You kind of get the sort of picture of what Lending Club is, and look how that stock has done, over the past little bit. I mean, it's just absolutely been getting crushed. If you look at Marqeta, right, and just look at the tech platform side, the issuer processor side, with what's happening lately with the, no real new fintech growth. And so the new clients actually come to a halt, and they can't just be worried about Cash App and, a single large client. If they lose that client, it's that stock will be delisted. But having these two separate companies without each other are both extremely worrisome. SoFi putting both of those different, sort of columns together of, hey, we have to compare ourselves to Marqeta. We have to compare ourselves to Lending Club. We have to compare ourselves to Robinhood, and then all the big players as well, right? That is allowing us to be so flexible, so nimble. And yeah, all of those industries are still hurting, but whenever those actually turn around and we actually start to see a more bullish side, the explosive nature of having these multiple things in our possession too, like Riley said, our costs, for R&D and these sorts of things are going to be much less than the competitors, especially for administrative costs, especially because that's really where that chunk of the licensing actually comes out of. But we're benefiting on all standpoints in that case. And I think that SoFi as a combined total of these amazing industries is something that will just take time. But like Anthony Noto said, it's about SoFi becoming a household name, and seems to be on the path of that.
Yeah, no, it's interesting because again, when Chamath took them public, he got a lot of hype generated for them. 2021 was going crazy. A lot of that has died down. And I think not that many people really understand SoFi from an investor perspective. I mean, we were talking off camera about how some people just think it's a cult stock. And, one perspective on that is like, yeah, it's just a cult stock. It's whatever. The other perspective is it's a fucking cult stock. which means the Colt is not going to sell for a 2x or 3x. The Colt is going to stay with it, right? If SoFi goes to 15 today, I don't know about you guys. Obviously, if it went there tomorrow, we would sell because that'd be ridiculous. But if it goes to 15 over the next 10 months, I'm not selling because we know the potential of it.
Let me ask you that, Amit. What if SoFi, by whatever, let's say short squeeze, hits 20 tomorrow? And
then I'm out. Then I'm out.
You're out.
Yeah, okay, yeah. But that's just because you have to be logical, right? But if we give it 7-8 months and it naturally, as earnings grow and everything starts to get better, macro gets better, goes to 15, why would you sell for a 3x? Like the Colt keeps the stock alive. This is how Tesla maintained going up 10, 20x because people didn't sell.
If that happens, we get a short squeeze, it hits 20 next week, you sell out completely. Do we get to replace you on the spot?
No, because you would sell too, motherfucker. You're definitely
I would sell too.
Like all of you are selling.
Okay, well, does it? Okay, so what?
If it goes up 400% in 1 week, if you don't sell, that's not like you should sell.
I mean, my options are definitely getting sold for sure.
That's because it's gonna come back down.
300.
You know that. 300%. Like it's gonna go back down. Go ahead, Tannor.
Yeah. So I mean, the game either is the market going up by 4x or is SoFi going up by 4x? Because if SoFi is going up by 4x, I mean, there are other deals on the market. I'll find them. You know what I mean? I'll sell it and wait for it to return and hold new stock in the interim.
Yeah, and again, the thing is, we don't want it to go up 4x in a week because that's just like not a healthy stock, right? Like all of us would be cool. Like if this thing goes 4x over the next 2 years, and people have been accumulating for those 2 years, and they're up a healthy 2, 3x, whatever it is, or even 4x. I still don't think a lot of people, because again, that's like when it's like when Tesla went to $10 pre-split, and then it went to 30. Like the Dave Lees of the world that were in the Reddit since 2013, they were not selling. They still haven't sold because they recognized what the potential was.
Yeah, so that's another thing that I saw in the comments is like, why did it go up that amount? Like, are we posting Q1 and you know what, we're showing the difference between 470,000 and 500,000 members, and then we show 1.5 million just because it like blew up on TikTok or something? Because if that's the case, then I'm not selling. So that's real gains. You know what I mean? But if the stock price is changing just because of sentiment, like people like Noto's hair or something like this, I'm out. Like, right. You know what I mean?
Gabe says you're forgetting the macro sucks. Well, I think that's our point. The macro, which is why I'm not expecting a 4x anytime soon, right? I'm happy to accumulate while we're here. But eventually, if we get there, I still don't think, even in 2 years, like who sells at a $20 stock price if your average is 5 and they've grown tremendously into like, no, you hold on to some winners. You give it another 7 years and you have some real cash by 2030 that you can do something with in your life because, you know, you bet it on a good company.
Amit, let me ask you, speaking to like SoFi becoming cold status, I don't see SoFi becoming like a cold status until the app becomes awesome. Like, or
that's a triviality, Riley. Like that's such a trivial.
So? No, like the app becoming awesome will lead to a lot of cultish user engagement, and I mean cultish in less of the traditional way that cult is used. But what people are saying right now is that on social media, people tweeting all day like you and me and Tannor about SoFi, that is a cult-like behavior, and that's okay because that means there's interest in the company.
So let me explain the rationality, Riley. This is why it's a triviality, okay?
What do you mean by triviality? Like
it's like a minor logistical point. It's not like a big. It's trivial. Here's why. Them upgrading their app has not been due to incompetence or an inability to do so. It has been due to prioritization of other bigger revenue generating items. And so they can update their app tomorrow and come up with this beautiful reskinned version, but they're not doing that on purpose because they're prioritizing other things. So that's why I say it's super trivial. Like if their app was the only thing that was stopping them from getting $20, then they could prioritize that top of the list, get it out next week, you know?
But what I'm trying to say is banking apps like really suck in America, and people don't realize it because there's no other alternative. And I really think that if SoFi does have a product that is super sticky, like better, like obviously better than a ton of all the other options, and it's just like a no-brainer decision, Like,
I mean, look, Riley, you might be right that if a lot of people start switching to SoFi, like it creates that kind of cult behavior and more retail sentiment as well because the app is good. But I think in general, like the interest in the stock is cult heavy, just like it is for Palantir, just like it is for Tesla. And here's the thing, no one should feel ashamed of that. There are very few companies that have the actual financials and the growth prospects and have a cult, right? So you've got AMC that has a cult, but they have nothing going for them, right? Like apps, it's just pure bag holding, cult, like it's just nothing. Same thing with GameStop. Same thing with, some of the other SPACs and stuff. But SoFi actually, this is why it's sad that, it got caught up in the Chamath stuff, but Chamath picked a good one. It was just, the market tanked. And so having that cult means we are not going to let this go at 3, 4x. We're going to wait for a 5, 7, 8x, because if you let it go to 3x and they're still growing 30% year over year by 2025, and then it goes up another 7x and you look like a dumbass because you sold for a measly 3x when you got in at the right moment, no one wants to be that person. So I think it's good, but it's
good. No, I think you'd be hard pressed to find many stocks that are either being held by such large retail holdings versus institutions at the multiples that we're at and at the market cap that we're at, as well as like even looking at YouTube or any of these things like these search factors. Find another stock with this high of search traffic and this low of a market cap. I think the only one that I've ever seen be even close is this automotive company called Mullen. It's extremely popular with retail traders. Yeah, but I'm not a fan. I don't hold it, but it is popular in terms of on YouTube and stuff.
Mullen went up like 200% back in March 2022, and it's been falling ever since. There were people in my DM,
and they've never forgot
and never recovered. But now there's a cult about, and there's people making videos, and those videos will get views. But what the fuck does Mullen have going for it, right? Compared to SoFi. So I don't know. It's exciting. It's exciting to be a shareholder right now and analyzing this company every week. All right.
Yeah.
I think that's it, boys. You got anything, Tannor?
Cool. No. I was going to talk about PayPal, but that's probably for another time.
Yeah.
Amit, scroll up. Pull up Jer's comment.
Whose comment?
Scroll.
Who's Jer?
Jer.
Oh, Jer. Amit, Tevis and I made an over-under bet about the offside comments you'd make on this pod. Can you please say Wait, really?
Yeah, basically. So I have like just people I know in my like day-to-day life that watch this pod. I actually have a couple of friends. Even when Chris was on, the one friend who was like, my mom's a VP at whatever the stock he was looking at, and they always comment on the offside shit you say. And we made a bet.
It makes the pod fun.
That's what I said. And we made a bet. Basically, the over-under was 3. And I said, I took the under. And here's my rationale for taking the under. I said, if this was being hosted on my channel, I would take the over. This is on Amit's channel. I took the under.
So I did all my offside comments on your stream when there were 30 people there. So if you guys want to know about those, you have to watch the last 30 minutes of Riley's stream on Tevis' stream on his channel. And
you know what's so funny is on YouTube you have to mark how your video might be offensive to people, whether it contains weapons or pornography or I don't know, just any of these sorts of things. And I don't mean like actual pornography. I mean like topics around pornography. And I was thinking about it after the podcast. I was like, we might have like checked off every single one.
Yeah, like war, global conflict, sensitive events, porn, like all of them. And
okay, to be fair, we were talking about the Netflix documentary on Pornhub, which is a great documentary. It's about the business of porn. It was a great doc.
Yeah, we were talking about selling the business.
This is your second offside comment, Tevis. You got one. I need to do one more for you.
No,
only 5 likes? How do we only have 5 likes on the stream?
We have 59. Look at Nate's comment.
Look, I'm not saying it. I'm not saying that shit.
Oh my god.
Oh man. I thought Tevis planted those friends. He plants friends.
It's just my alt accounts that I'm posting on the other screen. This is my friend.
Wait, I made Tevis laugh so much because Tevis was streaming with dividend streams, Steven.
Yeah.
And I come in, I have like 2 minutes before I have to go to a meeting, and I'm like, Tevis, tell Steven to stop sending me news. And
And
like
then-
Tevis starts dying.
And then
and Steve's like, why are you fucking laughing? And
But the funniest part was like other people in the chat were like, Steve sends me nudes as well. Me too. And I was just like, oh, fucking stop. I'm dead.
bro, me and Steve literally talk. He's just sent me a draft of his newest article that I'm about to go through. And so it's just funny because
Dude, honestly, respect to him that he he fucking emailed Noto at like midnight being like, hi, can you come on the podcast?
people were getting mad at me because I said on Twitter, yo, Anthony Noto, come on the pod. People were like, that's not professional. I'm like, motherfucker, that's like cool. Like he's a football guy.
Yeah.
Like the way he retweets and talks, I think he would respond to that over a
Dude,
professional email to PR.
Some people were mentioning it in the Discord. They're like, oh, we shouldn't be talking, like we shouldn't be addressing Noto to come on the pod.
Yeah, that's
And,
stupid. Whoever said that is said a stupid comment. That's absolutely idiotic.
That person's not in sales.
That's the dumbest
you
shit I've
gotta
ever heard
reach
in my
out.
life. And I'll say that twice. That's the dumbest shit I ever heard in my life. To have a retail community that cares about a stock. You know how many CEOs? Okay, so let me give you one case study. Richard Barlow. He's the CEO of Weejo.
Dude, I knew you were going to talk about that because you're wearing a sweater right
Are you
Yeah, you're
promoted by
wearing the
Weejo? What the
No,
fuck
I
is
just
going
love
on
the shirt.
here?
The shirt is dope. I love the shirt. They flew me out to Vegas.
The
I
one
don't own the
CEO
stock
he
at
gets
all.
to talk to.
But they were a Palantir SPAC. They IPO'd at $10 or SPAC'd at $10. Now they're at 55 cents. Okay. I was talking to him off camera before our interview, and I was like, so how are you guys thinking about media? He was like, bro, we will do any podcast. We will do anything to get media coverage because he's like, people just don't care about us. So my point is, do you know how many CEOs would kill to have a podcast dedicated to them, even if they don't publicly acknowledge it because of PR and public, whatever? I think Noto loves this. I think Palantir loves it. I think Elon loves this because at the end of the day, we keep interest alive for the company. It's earned media for them. And for us, it's like, hey, we get to make content, we get to form a community, and we hopefully get to appreciate the upside. But CEOs in this noisy economy, they need people talking about their companies. And
one other thing to add that's huge, it's infinite ROI for them. They don't pay us, they don't sponsor us, they don't even give me a fucking hoodie. So
I don't know.
I mean, the fact that we do SoFi Weekly every single week, having 200 people come on the live, having thousands of others watch, the highlights and the replays and all the little clips and engagement on Twitter, that's all free for SoFi. And
if Anthony Noto came on the podcast while it being live, it's only downside. There is no ROI.
right. So you have to think from his perspective. What if he says some shit? What if we say some shit?
I wouldn't say it's only downside. It could be
no,
great.
because there's way more risk.
Yeah, it's
Like,
just,
we could ask him-
like when I did the interview with Richard Barlow, they had to take 3 weeks before they approved it, right? Because they have all their legal shit. So Anthony Noto, speaking with the global head of research at Bank of America, he knows shit's gonna be fine. But speaking with 4 jackasses like us, like he doesn't know if shit's gonna be okay.
Well,
right?
so no, here's the deal though, and this is the value proposition for Anthony Noto. First of all, your entire brand is appealing to your users, your retail community. He's actually hopping on Twitter to fix people's issues himself. What you think like he's doing that out of the goodness of his heart? Obviously, he knows it's going to get attention. Obviously, he knows it's going to be good press. Number one. Number two, we are totally amenable to making this pre-recorded, to making this approved by their IR. If there's anything that's said that's offside or that's not approved by their actual public relations team, we can cut that out. So that's number two. Number three, this has become such a high demand thing. As the SoFi Weekly podcast grows in attention, more and more people are wanting it. And so the amount of goodwill that he will get with all of these retail investors, that the executive of this multi-billion-dollar company actually gives a shit about the retail community and the retail investors that are taking time out of their week every single week to do this pod for free. I think that is a really cool message that goes along with his entire brand and with SoFi's entire brand. So I do think that it is more upside than it is downside.
It's
Riley,
infinite upside, as you said, and like that's why, again, when you're looking at stocks, this is a piece of advice, and people may think it's controversial, whatever. But I actually got from Jeremy, Financial Education. He told me, look, the cult stocks actually survive because if they have like fundamentals, because the cult keeps them alive. Like if you type in Elon Musk on YouTube and just filter by day, there's literally millions of videos with his name in it per day. I mean, how much more earned media could you ask for? This is why they don't need to do advertising. SoFi paid $600 million to acquire customers, right? Like This
Well,
stuff
so
helps.
look at when Chris Hager literally got 15 minutes from Chris Lapointe, wasn't allowed to really post the video, but made this Seeking Alpha article just on snippets, and the amount of good that it did to completely crush an entire bear case that people had about SoFi's stock-based compensation was absolutely insane. So what does that show us? It shows us that the ROI for 15 minutes or 30 minutes of Chris Lapointe's or Anthony Noto's time has the ability to carry forward in multitudes in terms of what it can bring in terms of goodwill, awareness, and even hype or excitement around that stock.
Yeah, and one podcast feature is not going to pump the stock. It would literally just be a, hey, shareholders, we like you. We appreciate you. Thanks for sticking with us every day. That's it.
Sure. I think there's only two concerns that I think like Noto and their team would have is just banking culture. FDIC, like the most regulated business in America is banks. Saying anything that they can't take back. Of course, we would.
It's pre-recorded, Riley. Like we'll record it ahead of time.
Yeah, and we'll screen the questions. All that.
They will get
I'll be on my best behavior.
We'll send an edited video to them and be like, "Hey, whatever you guys don't like, we can cut."
By the way, that's not a choice. We have to do that.
Yeah.
It's like that. That's not like we have to. Literally, that's what's gonna happen.
Yeah, we'll literally mute Amit's line so he doesn't say anything crazy, and then me, Tevis, and Riley will talk to Anthony Noto, and that'll be great.
That's it. All right, guys, I gotta go. This is awesome. Thank you, 186 people, for being here. Please join the Discord. Everyone's Twitter and YouTubes are in the description. We really, really, really appreciate you guys taking time out of your Friday night to be with us and join this community.
How far off are you from 17K? Because you've been at 16.9.
Bro, I'm at 16,996. It's like,
can we get four of you
subscribers?
4 subscribers for Amit. There's 186 of you mofos here. 4 of you hit that subscribe button.
We need 5. 16,995. All right, we need 5 people to sub.
And look, I'm sure there's some people that come into the chat all the time and they're ashamed because they don't have that button pressed. Okay, your name doesn't pop up in some sort of feed. It's just a number. So
we're at
he's not going to know.
4 more. We got 4 more.
He's not going to know if you guys just press that button. So just make it get to 17,000.
I love it when Tannor grabs his mic and gets really close to the camera and is serious. It's just you always know some real shit is coming. Yeah.
Damn. People who are
melting bullets
that would be. I'm sure there's 4 people that are not. Yo, I lost 3.
Well, guys, you have to look to see if you guys are subscribed. Don't press it just for fun.
Oh my gosh. All right, maybe we'll wake up tomorrow. It's been stuck at that 993 range for like literally 4 days.
Yeah. Don't forget about the rest of us too. I just passed 5K, so I'm pretty happy.
Yeah, no, shout out to Tevis. Just passed 5K. Super awesome.
Yeah.
And we're gonna keep it going. This is cool, man.
Dude,
it's cool to grow a community.
I want to give a little shout out to Throwable. That dude was so funny on Tevis's live stream. He was just saying the most ridiculous stuff. I was laughing just watching this stream. A big portion was because Throwable was just in the comments saying shit like, Noto has 2 dominant hands and stuff. Hyping him up for no reason.
Dude, so here's the context. If you go, I never do live streams. I was so fucking nervous to do it, and I was just like, because I'm not Amit. And if you go and actually click on that live stream and you watch the first 10 minutes, it's gonna be cringe because I'm gonna like, okay, guys, let's get excited, and it's just like it's silence.
And Steven's like the most non-exciting person ever.
Steven's just like waiting for his points, and so I'm just like so fucking, and that shit went downhill so fast because Amit and Tannor hopped on, and it just like.
After 2 hours and 30 minutes, so you did a good job. You maintained it. Like I had 2 meetings and I had 2 live streams. I did like 4 things, and I come back. I'm in my bed. I just pull up YouTube and I'm like, this motherfucker's still talking. I'm like, what is going on?
Yeah. You were like, this went terrible because Tanner's in here trying to sabotage the live show. I was there to support you.
Honestly, I think you guys coming on like actually made it better because like you just added some flavor. I don't know. I have a newfound respect for I think the dynamic of this pod because there's highs and lows and there's like serious and then nonchalant and it just has something for everybody, I think. So
Well, it's really cool, man. I mean, for anyone who has never attempted, so I have a friend. I know I said I had to leave, but that's okay. I can stay like 4 more minutes. I have a friend who just did her first podcast ever, an interview, and like she did it in partnership with a Substack, and the Substack got like 30,000 views, and she was crying all day because she was like, I cannot believe that I created something, and it was just an interview at the end of the day. You know, all of us do interviews all the time, but this was our first time doing it. And she was just like, I can't believe 30,000 people had a chance to even like watch it. And it's like, we underestimate sometimes, even though we're all just sitting around talking about stocks. Like there's 173 people here. There were, 220 at one point when we were really going at it about SoFi. That's a community we're building. It's cool to do it every week. And 174 people literally have us on their TV screens or phones or their computers right now. And they kind of care about what we're talking about, which is just, it's super dope. And I appreciate it so much for people being here. I think all of us appreciate it a lot. So
I do love you guys, man. You guys are my my online guesty besties.
I think honestly, can we settle it here that once a year, I know All In has their summit, but like once a year, can we just all fly to one place and just do like an in-person thing? I think that'd be so much fun.
it would be dope. We should try to do it once a year.
Two of those people,
I'm really
two
scared.
of those people are in Toronto, so why don't we do a Toronto meetup?
Well, I want to travel too. Fuck Toronto, so
You can go anytime.
Y'all can come to Texas. I'll host
Well,
the whole thing, and we can shoot guns.
that's a value proposition for you.
That's literally how that happened. Is Riley was like, "Hey, if you guys ever want to come down to like Texas," which I thought was just like a like a nice thing to say, and Tevis is like, "I'm booking my flight today."
You need
I
some
need a
freedom
break.
in
He just
y'all.
took him up on it.
Guys, pound your
So-
wiki, pound your weekly's tomorrow because Chris is a little sick, so we're gonna do it tomorrow, and we'll cover that. Amit, where do you get your hair styled? I don't honestly. Sometimes I get out of the shower and it just comes out like this, and that's it. So that's all.
He didn't change a thing.
Yeah, literally nothing. San Fran, SoFi headquarters. Should we go to San Francisco? That'd be. I used.
I will fly to San Francisco. If Anthony Noto says, "Yeah, come to the headquarters," I'll put you guys in the
I'm there
boardroom. We'll
tomorrow.
do
Next
a
flight.
podcast. I'm packing my bags, boys.
Seriously,
I love the San Francisco airport because I used to date a girl who went to Stanford when I was in Rutgers. So I used to fly across the country like every other month to go see her.
Wow.
So San Francisco is a big place in my heart. No, Tanner, what's the joke? Here we go. What do you got?
No, I was just going to say, no, not a joke. I was going to say, so with that being said, very special guest next week. It's either going to be Anthony Noto or Amit's ex-girlfriend.
No, bro. Could you imagine, bro? I don't even
know which one would gain more views. I think the girlfriend might win out.
Bro, I think she thinks the stock market and capitalism is like unethical. Like,
I think she just was tired of the golden showers.
I think Amit's ex-girlfriend honestly might bring more views, and this is my thought process. Reddit, I think, has like SoFi stock has like 13,000 members or something like this. Amit, very personal channel, has 17,000. Okay, so who is really more popular?
Well, I mean, bro, if you have a video with a girl ever, people are interested. Like, that's just in general.
Imagine how much fucking dirt we'll get on Amit by having this one single podcast.
Yeah, that's true.
Dude,
no, Tanner, this is why you should do videos with your girlfriend. Just like ask
I know
her
this
about
is
SoFi.
what I was just gonna say. He was like, "Oh, if you do a video with Sam, like I'd sit there and watch it all day," or something like this. And then he goes on to proceed in the next live that he did on his own. He's like, I don't know what it is. Like, girl's name's Sam. I've got a thing for him. Like the whole time I was like, "Bro, you just met my girlfriend. Like, leave her alone."
No, it's because I actually, bro, in 2011, like the first real crush I ever had was a girl named Samantha. I was like in love with this girl. Like I was playing Drake's Take Care, thinking about this girl. I never dated her. Like it was that name is always in my head. So I love that name. But no, I think you and your like just being like asking my girlfriend about what she thinks about SoFi, that would like it's a banger video. People would care.
I don't think she knows what SoFi is.
That's the funny part. You like just show like, do you think Anthony Noto is hot? And just like see what she says. Right? Like,
yeah, like, see, that has to be the vibe because I feel like you're gonna ask her what SoFi is, and she's gonna be like, I don't care. And you'd be like, okay, so they have these many lines of business, and she's gonna be like, fuck
Yes,
off.
that's a great video. Explaining.
No,
SoFi.
I do tell her about all that. Like I mean, you could ask my girlfriend what payment for order flow is. She'll come up with something. It might not be spot on, but it'll be around.
I don't know if I want the girl I marry to like the stock market or not like that. I kind of hope she doesn't care about the stock market because then I
Doesn't
don't get to
matter,
talk
man.
to her about
as long
the
as she
stock market, which
supports
is
what
good.
you like.
'Cause
She
I
doesn't
kinda
need to
wanna
like
start
the same
having,
things
like-
that you like. She just needs to support whatever you like. You know.
No, I get it, but if she likes stocks and we're actually talking about price to books and shit, I like feel like I kind of want to get away from that when I'm with,
But like, why would you want to be talking about price to book with a significant other when you're talking to?
Well, if
with-
she's a
with-
stock market junkie and she's trading gold, we're gonna talk about that shit. Like that's just gonna happen.
Yeah.
Like
Yeah.
like, I don't know if I don't want to. All right,
No, it's true. You're gonna have like some Stephen Fiorillo level conversations with your girlfriend, and, like some pillow talk.
yeah.
Sorry, I know we're trying to wrap, so let's just
Thank
wrap.
you, 164 people, for being here. We'll see you next week. Good night.
Good night.
Peace.